Welcome to the deep dive. Today we're jumping into Ecolab's Q3 2025 results.
Yeah, looking at the earnings call, the presentation material.
Right. And our mission here is to really pull out the core drivers. What's actually powering their success right now.
Especially those surprising tech angles and the segments that are just showing massive double-digit growth.
So the big picture for Q3, well, despite all the macro uncertainty out there, they delivered pretty solid strength.
Definitely. Reported sales up 4%. That shows they're holding up well.
And the organic number, 3% growth, which is good. But the way they got there is what caught my eye. It seems like two different things working together.
Exactly. So volume, the actual amount of stuff they sold, that was up 1%. Pretty steady.
Okay.
But pricing, wow, that accelerated. Up 3% just from price increases. Last quarter, it was 2%.
So that's a real jump.
It is. And that discipline, it really paid off on the bottom line. Adjusted earnings per share, up 13%.
Strong double-digit growth then, which, in this environment is pretty impressive.
Very impressive. And look at the operating profit margin, the organic OI margin.
Yeah, that expansion was huge, 110 basis points.
Margin went up to 18.7%, almost 19%.
When you see margins expand like that, it really says something about efficiency, maybe the product mix.
It screams their strategy is working. And that brings us nicely to, well, how their business is actually split.
Right. Because it's not all firing on all cylinders equally.
Not quite. You've got 85% of the business, what they call the growth engines, and the core businesses that's really doing the work.
Okay, the powerhouse part.
That part delivered 4% organic sales growth and mid-teens organic operating income growth. Healthy stuff.
But there's the other 15%.
Ah, yes, the dragging part. Basic industries and paper, they actually shrank by 3%.
And that's significant enough to impact the overall number.
Oh, yeah. It knocked a full percentage point off the company's total volume growth. It's definitely an anchor right now.
So what are they doing about it? Just letting it drag?
No, they see it. The materials say management is shifting resources, trying to innovate there.
But it's not a quick fix.
Apparently not. They don't expect those businesses to get back to growth until sometime in 2026.
Which means that strong 85% needs to keep running hard for a while.
Exactly. Which really highlights their core strategy, especially around pricing, this value pricing idea.
Yeah, I wanted to ask about that. Pricing accelerated to 3%. Some of that was a surcharge, but mostly this value pricing concept.
It's fundamental to how they operate, and honestly, a huge advantage. It's not just, oh, inflation is up, so our prices are up.
It's different.
It's totally different. The idea is the total benefit the customer gets, saving water, energy, better operations, avoiding some big safety disaster, that value should be way more than the price increase.
Like 2 or 3 times more.
That's their target, yeah. 2 to 3 times the value delivered versus the price they capture.
So the customer feels like they're still coming out ahead, even with a price hike?
Precisely. It changes the whole dynamic. It's not about cost, it's about savings and performance. It builds loyalty.
That makes sense. And they think the sweet spot for that is around 2% to 3% long term.
That's what they indicated, yeah. A sustainable level.
Okay, so that discipline underpins the core. Now, let's get to the exciting stuff, the accelerated growth engines.
Right. These are the areas really gaining speed: Pest Elimination, Life Sciences, Global High Tech, and Ecolab Digital.
And together, they're growing double digits.
Collectively, yes. Riding some big secular trends.
Let's break them down. Pest Elimination, 6% organic growth. But the story there isn't just the growth number, is it?
Not at all. It's the digital transformation happening within it, how they're changing the work itself.
With the Pest Intelligence platform, the IoT devices.
Exactly. Think about the old way. The sources use this great comparison. A technician used to spend like 95% of their time just physically checking things, traps, looking around.
Checking the formerly mousetraps, as they put it.
Right. Now they've got over 400,000 of these smart devices out there, aiming for over 1 million.
So the devices do the monitoring?
The devices do the routine check-ins. So the technician, now they spend 95% of their time actually solving problems, advising the customer, maybe selling new solutions.
It flips the model completely. From manual inspection to like high-value consulting.
Total shift in labor value. And that efficiency, that extra value for the client, that's why margins in pest jumped to nearly 21%.
And they're aiming for 99% pest-free outcomes. That's a bold claim.
It is. It shows the confidence in the tech.
Okay, that flows right into probably the buzziest area, AI infrastructure, global high-tech and digital.
Oh, yeah. Global high-tech sales up 25%. Astonishing growth.
And this is driven by data centers and chip manufacturing, the fabs.
Exactly, the backbone of the whole AI revolution. And the scale, it's
Yeah.
kind of mind-boggling.
The numbers they cited were pretty wild. A new data center opening every week or two. Billions in investment each time.
Yeah, $500 million to $3 billion per data center. And a new fab, maybe $1 billion average opening monthly.
Wow. And the existing base is already huge. 10,000 data centers, 500 fabs going to 600.
But here's the catch. The big constraint everyone forgets.
Resources.
Water and energy. The sources laid it out starkly. By 2030, this industry needs extra power equal to all of India.
And drinking water equivalent to the entire U.S.
Just for this sector's growth, it's staggering. AI's growth isn't just about chips, it's about managing water and power.
Which is where Ecolab sees a massive opportunity, right?
Right.
With tech like this 3D Trezor.
Exactly. 3D Trezor is for that cutting-edge, direct-to-chip liquid cooling in these new AI data centers.
So it helps manage the coolant?
Manages it, optimizes it in real time, better fluid stability, purity. That means they can help cut the power used just for cooling by up to 10%.
And that saved power can go back into computing.
Right back into compute power. That's a huge win for the data center operator.
And they're doubling down here with an acquisition, too.
Yeah, the pending deal for Aviva Electronics, that'll almost double Global High Tech to around $900 million in size.
And that's specifically targeting water in chip making.
Specifically, circular water solutions for microelectronics. Making chips needs insanely pure water.
How pure are we talking?
The sources said, get this, 1,000 times purer than injectable drugs.
Wow.
Huh?
Okay, so any tiny impurity ruins the chip.
Exactly. And Aviva helps them build systems to recycle and reuse that ultra-pure water, which is critical given the scarcity issue we just talked about.
So it tackles both the quality and the quantity problem.
Precisely. And all this is supported by their internal digital arm. Ecolab Digital kept up its 25% growth rate.
It's a significant business now on its own. Over $380 million annualized.
Yeah, and they see a $13 billion total market opportunity there. No wonder Fortune ranked them number 9 on that AIQ 50 list.
They're using AI internally too, right? Not just selling it.
Oh, absolutely. Driving their own efficiencies, which we'll touch on with SG&A later.
Okay, and the last growth engine, life sciences.
That improved to 6% growth.
Yeah.
Biopharma doing really well, double digits.
But there's a mention of a bottleneck.
Yeah, a short-term capacity constraint in their industrial water purification side.
Yeah.
But they're building a new plant in China, expected mid-2026, to fix that. So they're investing to keep up.
Got it. Okay, let's shift gears slightly to the operational side. This One Ecolab strategy, what's that really about?
It's about breaking down the walls internally. They have all these different divisions: water, hygiene, pest, digital. One Ecolab is about bringing them together for the customer.
Especially the big enterprise customers.
Exactly. They see a huge $65 billion total market, but $3.5 billion just in cross-selling opportunities with their biggest clients.
So instead of selling, say, just water treatment chemicals, they sell a whole package.
A holistic outcome.
Yeah.
Better food safety and lower water use and optimized sanitation, all integrated. One point of contact.
Makes them much stickier, I imagine.
Hugely sticky. And the prime example they gave was food and beverage.
Right. Sales there accelerated to 4% faster than the market.
And they directly credited One Ecolab, combining cleaning, water, digital. It delivers more value together than the pieces separately. They mentioned unifying hygiene and water in North America specifically.
That integrated approach seems key. Does it show up elsewhere?
It does. Institutional and specialty grew 4%. Hospitality is doing well, driven by value pricing and that same One Ecolab approach.
And the margins there?
North of 20% operating income margins in institutional, very strong. Specialty grew even faster, 7%, with quick service restaurants in high single digits.
So the core and the growth engines are benefiting from this unified strategy. Yeah. And internally, it's helping efficiency too. You mentioned SG&A.
Yeah, they're really focused on productivity there, expecting 25 to 50 basis points of leverage, meaning cost savings relative to sales every year going forward.
Driven by One Ecolab and using their own digital and AI tools internally.
Exactly. Practicing what they preach, using tech to streamline their own admin and sales costs.
Okay, so pulling all this together, what does the financial outlook look like? Management seems pretty confident.
Very confident. They tightened up their 2025 guidance for adjusted EPS. The midpoint is now $7.53.
Which keeps them in that 12% to 14% growth range for the year.
Yep. And they expect that momentum to continue. They're guiding for steady 12% to 15% earnings growth in 2026 and beyond. That's consistent, reliable growth.
And the margin target. They have that long-term goal.
Still firmly aiming for 20% operating income margin by 2027.
How do they get there?
They expect 100 to 150 basis points of margin expansion each year until then. It's built into the strategy, the value pricing, the shift to high-margin tech, the internal efficiencies.
It sounds like a clear plan, not just a hope.
It seems very disciplined, yes.
So, to wrap it up for you listening, Ecolab's showing resilience through that value pricing foundation. They've got these powerful growth engines, especially in high-tech and digital, feeding the AI boom, and it's all being pulled together by this focused one Ecolab execution.
It's a solid strategy, but that final thought, it really comes back to that resource constraint we talked about.
The water and power for AI. India's power. The U.S. is drinking water.
Yeah. The most advanced technology mankind is developing, AI, next-gen chips. It fundamentally depends on managing water, and not just managing it, but getting it to levels of purity that are almost unimaginable.
So the provocative thought is, what does it mean when the future of high tech, the future of AI, literally rests on mastering something as basic and increasingly scarce as water?
Does that make companies like Ecolab, the ones providing those essential, ultra-pure, circular water solutions, does that make them the truly indispensable infrastructure players for the next few decades? Something to think about.